Greetings. Welcome to my weekend market recap. 17th September 17th September 2022. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these resources are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes. For that, may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if options trading is suitable for you. I trade using the Q systems. It has multiple components. All the components run on Metastock platform and the technical analysis component runs on TradeStation as well. These are the different components. That was the last slide. Let's now use the live systems. First, to look at the global markets, starting with Australian Index All Ordinaries. In the weekly chart, All Ordinaries is bearish in shape, bearish in color. In the daily also, it is bearish in shape and bearish in color. What is the trend for All Ordinaries? Is it downtrending? No. It is moving sideways in a range. It is near one trend line support. It just broke that trend line support on Friday, but it is still near the lower edge, this trend line support. Therefore, at Friday's close, I was not going to short All Ordinaries. Am I going to buy? Certainly no, because Friday's candle is bearish in shape and color both. Currently, I have no preferred trading direction. If price comes down further, I will still not be able to short because there is another trend line support nearby. And if price goes up next week, closes with a, let's say, bullish shape candle, I will be reluctant to buy because there will be a trend line resistance nearby. Therefore, I will like to see a breakout either to the upside or to the downside before starting to take new swing trades in the Australian market. Sideways and no preferred trading direction. What about Japan's Topix index? That is also moving sideways inside a range. I will not like to take any trade now. If it comes to the trend line support and bounces up from there, then the trend line resistance will be far away and I'll be willing to take a long trade if it bounces from this trend line supports. At which point it will also bounce up from the weekly trend line support. Right now it is range bound and I have no preferred trading direction. Next, China market CSI 300 index. Weekly is bearish in color and shape. Daily bearish in color and shape. Daily has a very clear breakdown from the trend line support. and Friday's breakdown happened with this extreme high bearish momentum signal, big move down 3. It also has bearish pressure, high volume. Looking at that, I am willing to look for shorting candidates in the China market at the close on Friday, and I would prefer to short not the index itself but fundamentally weak stocks that are also giving low risk short setup. China market downtrending and preferred trading direction is bearish shorting. Next, India's Nifty 50 index. What is the trend? It is inside a box pattern now. We have equal highs and we have a watermark pivot level. Inside a box at the right edge, and it is somewhere in the middle of the box. Therefore, I am not going to take any trade now. I'll wait for either for price to go up and break out of this box pattern, or go down and again break down from the box pattern before taking the next trade. Notice that in the weekly it came right to the pre-existing trendline resistance and tilted down from there. In fact, Friday's drop was a sharp drop. If you look to the left, the last such sharp drop happened here in the middle of June. From June till September, we didn't have such a bearish candle. So this Friday's candle was very bearish, and looking at the pre-existing trendline resistance in weekly, when price came here, created a double top, you could book profit in existing long positions, or at least protect profit using trailing stop. Then you would not have to suffer most likely a considerable loss that happened on Friday in many Indian stocks. Overall, the trend is sideways and I have no preferred trading direction right now. Very indecisive market, as you can see, as far as swing trading is concerned. That is true for many of the global markets. Let's look at the last market that we check usually, that is FTSE UK index, FTSE. This is also inside a range, both in daily and weekly, and it is near the lower edge of the range. The upper edge is quite a distance away. So right now I'm not going to take any trade. The weekly candle shape color is bearish, daily candle shape color are bearish, daily candle shape color are also bearish. So I'm not going to buy on Friday. I'm not going to short also, because both daily and weekly are near trendline support. If next week price can go up from the daily and weekly trendline supports, because the resistances are far away, I'll be happy to look for buying opportunities. Those will be low risk buying opportunities. Right now it's moving sideways, and I will look to buy if price goes up next week. Nothing to do right now. If that is the situation with the individual global markets, how is the global index? We can decide that using the global index chart, a custom index part of Q market breadth, that is also range bound at the lower edge of the range, and on Friday it broke below multiple trend line supports with a bearish shape, bearish color candle, and with extreme high bearish momentum. The big move down 3 with bearish pressure with very high volume. Here I will apply the same conclusion that I did for the China market. It has a decisive breakdown with extreme high bearish momentum. I look to short individual fundamentally weak stocks. Now, though these usual global markets that we study, none of them are giving buy signals and they are range bound mostly. Some are breaking down from the range. I noticed there is one market, global market, not a very large market, but the market of a country where I used to live for many years, that is Singapore market. That is looking quite strong. Let's look at the Singapore Straits Times Index, the market index, and look at it using the weekly daily at a glance template. If you noticed, you may review the video, scroll back and look at the indices we studied just now. None of them had a bullish backdrop color, but Singapore Straits Times Index has a bullish backdrop color. In the daily, it is in a range. However, this week went up. Very unusual considering the weakness in the other global markets and also very much weakness in the USA market. It actually went up with high volume in the weekly chart. In the daily, it is inside a range, but if it can break out of this trend line resistance, there may be buying opportunities. Those may be flow trend following long setups, or those may be breakout setups as well, or maybe pullback setup, trending market setups. You may keep an eye on that STI breaking out of the trendline resistance, and if that happens, you may look for buy setups. Notice also Friday's bar also closed higher than Thursday's bar and it went up with very high volume. It's of course outperforming the USA market. Again, Singapore market is not a very large market. That's why we don't consider it as a constituent of the global index. Overall, the global index is breaking down. Until now, though the USA market was coming down, global index was holding to its range. That has changed. It is now breaking down. That's bearish. USA market is also certainly bearish. Usually I go through all the analysis and then come to a conclusion, but let me state, it's like a spoiler alert. The market is bearish in USA. And if you follow me on Twitter, the Twitter handle is Superior Profit, this handle. You will see that for 3 days in a row, I explained why market is bearish and remaining bearish and why we should not jump into buying many stocks. Last of that was on 16th September. This is actually a series of tweets, sometimes using Q Finder, sometimes using Q Edge, sometimes using Q Global Market Breadth. For 3 days in a row, I showed that why we will not be willing to buy now using Q guidelines. And that conclusion is holding at the close of Friday as well. Let's look at the USA market indices starting with S&P 500 using the ETF here SPY. And I will point to certain very bearish signals and also point to a possibility of recovery coming soon. Not yet, but coming soon. Possible. Firstly, we have a very bearish shape candle, and if you notice here, it has a bearish reversal. And just 1 week before that, we had a bullish reversal. And see how the candles sizes are increasing. 2 weeks ago, we had this candle, bearish shape, bearish color. Then a bullish reversal, a larger candle, engulfing candle, bullish side. Now a even larger candle, bearish side, engulfing candle, and bearish reversal again. This is showing very much indecision. Yes, price came down, but this kind of is also called a megaphone pattern. Megaphone pattern because it looks like a megaphone. The highs are going up, the lows are also going up. So market is in a way indecisive. It's an indecisive pattern. If this pattern continues, then we expect price to come down little bit and then close higher. That will also mean that price is reversing from the trend line support. There is some hope in that the trend line support will hold. Firstly, because they usually hold quite well. And we have here trend line support in both weekly daily. They usually hold quite well when price has already declined significantly from a swing high before approaching and reaching the trend line support. So I am expecting the trend line support will hold. That may give low risk buying opportunities. There are plenty of fundamentally strong stocks at a very low price. So if the support lines hold, that will give many buying opportunities, but not yet. We don't need to hurry into buying in this market yet. So two things to note. First, a megaphone pattern, two or three things. Megaphone pattern, number one, that is indecisive. Trend line support, price is approaching that. And we had bearish reversal before that bullish reversal. If that trend continues, we may look for a bullish reversal or at least some kind of bullish recovery. So bearish market, but may observe if price can bounce up. And this pattern, at least some of these characteristics will be true for the other market ETFs also. Let's look at QQQ. We here also have the megaphone pattern. We don't have the reversals one after another. We just have one bearish reversal. And we again have the trend line supports nearby. Price is already far from swing high. Therefore, there is more than 50% chance that this trend line support will hold at least for long enough to give us a profitable long swing trade. I'll not buy QQQ, but I will be happy to drill down into underlying stocks, find fundamentally strong stocks and buy those. So QQQ bearish, but some hope that price may recover next week. Dia has a trend line support in daily. In the weekly, support is broken, but with a long lower tail, that bullish momentum may continue and price may recover the weekly trend line support. We have a megaphone pattern. We don't have successive reversals, we just have a bearish reversal. Another thing I didn't point to when I studied SPYQQQ, you may relook at those at a glance templates. If you look from right to left, you will see the volume pattern. All the bigger volume bars are all bearish bars. So yes, price went up a lot and then it came down a lot, but the high volume days were majority bearish days, and that pattern was true for SPYQQQ also. IWM, less pronounced megaphone pattern. Weekly support is far away for small cap. Daily support was breached on Friday, however, with a long lower tail and a bullish indecision. If that bullish momentum continues, intraday bullish momentum, then price may regain this daily trendline support. Again, the high volume bars in the daily were mostly bearish, and yes, in the weekly also the high volume bars were mostly bearish. So it's a bearish pattern looking at all the market ETFs as of Friday's close, but there is some hope that price may recover next week. What about the internals? That is also bearish now. This is one of those rare weeks where I upfront stated that the market is bearish. Let's look at the very useful single chart market breadth total view. This chart is based on market's internal, it's not an external view. The yellow line, percentage of stocks above 50-day moving average, came right to the overbought level. And this I have mentioned many times. It works like a clockwork. When it is at overbought level, we stop buying, we look for shorting opportunities. And since then, the yellow line has come down, creating lower highs, lower lows. So we could stop buying from here and start to short. And if you followed me in the market roundups, the videos are still there, of course, you would know that I shorted right here. And prior to that, I had bought here, but I shorted here. I publicized it before knowing the results. That was based on several signals, including this yellow line being at overbought level at that time. Now it is bearish. The yellow line is continuing to be bearish, and it is very close but not yet hitting the oversold level. That's bearish. We have a Phoenix signal, that is a bearish momentum signal based on market's internals. The candle itself has a bullish shape. If a Phoenix comes at a swing low, then we may get ready to buy, but we will not buy until we have a Eureka day or large accumulation count like these ones. So we may get ready once again to buy, but not buy until either a Eureka day or an accumulation count comes. Usually accumulation count comes on the same day as Eureka or before. Very accurate bullish reversal signal at the bottom, we may wait for that. The other overbought oversold indicator, 3-month new high low, is already at oversold level. Last week it wasn't, but now it has hit the oversold level. That's another reason we may look for a recovery in price. What kind of stocks we may prefer to buy? Based on past week's data, growth versus value line is continuing to go down. So growth is underperforming. We will not like to buy growth stocks. Small cap versus large cap, I think it is indecisive, going up, down, up, down. So we may simply focus on value stocks, not particularly value small stock or value large cap stocks, small cap or large cap, just value stocks. And if we wanted to know whether mega caps are at a buy point, let's look at the mega cap custom index. What is the trend? No trend, it is range bound. Range is created by many trend lines, support and resistances. It is at the lower edge of the range and we have a bullish indecision. So if price goes up, I will not be unwilling, meaning I will be willing to buy some mega caps. The trend line resistance is far enough away to give me attractive reward risk ratio. And some of the mega caps have robust fundamentals, so you may buy that also. However, having said that, do I prefer to buy value stocks or growth stocks now? That answer is very clear. Currently, the preference is value stocks. The mega caps are usually not value stocks. So when I combine those two attributes, those two analysis, then I'll have to say I'll ignore buying mega caps. Instead, I will focus on value stocks. Usually, mega caps are not value stocks in the USA market. Having said that, because mega cap is at a trendline support, why don't we look at mega cap stocks? This webinar live session doesn't have any fixed format, so sometimes I may look at different things. Let's look at the mega caps, starting with Amazon. Jeff Bezos is not the second richest person in the world anymore, but Amazon is still a very well-known stock. Is it near support? No. So let's not think of buying Amazon. There will not be any Q buy setup even if price goes up next week. No low risk buy setup, at least not right now. Okay, Apple. By the way, notice one thing. Let's go back to Amazon. This is one thing I noticed in many stocks. I showed that in market ETFs and noticed that in many stocks, bearish reversal, back to Amazon again, and a megaphone pattern. Okay, back to Apple. Not much of a megaphone pattern, but a bearish reversal. That is a very bearish signal. Though Friday once again closed with bullish indecision, not bullish signal but bullish indecision. Looking at that, if you had short position in any of these stocks with bullish indecision, you might close those short trades with profit. Well, let's continue. Microsoft, next mega cap. Notice again a bearish reversal. Now Microsoft is near a support level. Both in weekly, the watermark support, and daily watermark support. It actually breached the watermark in daily. It has a bullish indecision. If next week price goes up, goes above this watermark support, that will create a bullish no, sorry, not bullish, that will create a false downside breakout. That's a bullish enough signal to look for a buy setup, either using daily chart or if you have real-time charts, using real-time precise entry chart template. So among the mega caps so far, I'll be willing to, if I wanted to buy mega caps, I would prefer Microsoft over Apple and Amazon. Let's continue. There are few more mega caps here. Meta has a decisive breakdown. Notice the bearish reversal in weekly. There is no buy setup that will come here. Google, I will pass that. I still prefer Microsoft. Netflix, this is one stock that went up on Friday. It has a trendline support. Friday's candle color and shape both are bullish. Relative performance sharply outperforming the market. Daily has a bullish shape candle. There is no Q trade setup. However, looking at the pattern in daily and weekly, I'll be willing to buy Netflix rather than the other other mega caps. So looking at the mega caps so far, first preference for long trade will be Netflix, second will be Microsoft. But these two will give different kinds of trades. You notice Netflix will go up from trend line support, is holding the trend line support, and look back at Microsoft, it will be a reversal trade based on false downside breakout. Different trade setups, different trading techniques, but equal probability of success based on many trades taken earlier. The last of the mega caps, Tesla. Here also we may look for a buy setup, and here we have a third technique, neither a trendline support holding technique nor a false downside breakout technique, but here a long breakout technique. It has broken out of the trendline resistance. This week's candle shape is indecisive, but this week's price went up. So in a weak market, this stock went up. That is bullish. It has a long breakout from trendline resistance. So if it goes up further, we may look to take a long position in Tesla. So what is my preference then? If we like to be more trend following than trend reversing trades, we like those trades, trend following more than trend reversing, then first choice will be Netflix, second will be Tesla, third will be Microsoft. That is the technical analysis. You may use the QVital to check the stocks fundamentals and also look at their industries to see overall which one of these you prefer, if any. Personally, I would like to favor value stocks. I don't think any of these. Oh, okay, why don't we look at them? Though I told that they may not be value, I don't look at their valuation every day. So what I did, I copied the ticker symbols from TradeStation. Let's go to Vital. Import from Radar of TradeStation. That will convert the tickers to Reuters symbols. It has done that very fast. Let's carry out a fundamental scorecard analysis of these 7 mega cap stocks. Value is favored. What I am trying to look for is if any of these 3 stocks that I was willing to buy, is there any value stock there? The preferred stocks were either Microsoft or Netflix or Tesla. These 3. Let's see. Microsoft is actually undervalued as per Q scorecard. Well, then the decision is clear. If we are favoring value stocks, and I am doing that, then technically though Netflix has a more trend following setup and Tesla has a breakout setup, I am really more in favor of value stocks right now, so I will favor buying Microsoft. Of course, if you don't favor value stocks in this market also, then you may have different choice, but I am favoring value stocks right now. Well, that was a look at the mega caps. Mega caps are looking weak. Many of the mega caps had weekly bearish reversal that we saw in the market ETF. So there is no bullish signal anywhere so far, and there will not be any bullish signal going forward in today's analysis. There is some hope market may stop falling next week, but no signal as of yet. Now let's continue. Let's look at Q Edge, and there also in the sector industry stock advanced decline breadth, we'll see very much oversold condition. 1 month to 1 day sector industry stock advanced decline breadth, everything is red now. Remember how one by one day, 2 day, 5 day, 10 day, and now 1 month has also turned red. When everything is red from 1 day to 1 month, then it is oversold. Will I buy at Friday's close? No, I will wait for 1 day in real time to turn green. And this is what I mentioned in one of the recent tweets also. That green day has not happened yet. And we can find that out in real time during market hours. It will show real time colors, and we may decide in real time and take the trades in real time as well. So getting oversold but has not stopped falling yet. And if I look at the bucket analysis, distribution of stocks across their Bollinger Bands, it is bearish. 85% of the stocks in S&P 1500 are below mid Bollinger Band. That is very bearish. Is it oversold based on bucket analysis? No. Bucket analysis will be oversold when the lowest bucket, that is stocks below lower Bollinger Band, hits 30 to 40% level. Now it is only 8.2% level. Still long way to go. So we will need to wait for some bullish signal before buying. It's getting oversold from multiple angles, whether we look at the percentage of stocks above 50-day MA, whether we look at 3-month new high low, whether we look at sector industry stock advanced decline breadth, whether we look at the market ETFs dropping for several days and approaching trendline support. It is becoming oversold, but we need to wait for a bullish day before buying, and hopefully, let me rephrase, not hopefully, I will rather see a bullish accumulation count in market breadth chart before buying. That may be accompanied by Eureka, but I don't have to wait for Eureka. If there is a large accumulation count, I'll be happy to buy on that day. But that has not happened yet, so no bullish signal, and I mentioned that before. Technical breadth from Q Finder, the same observation will hold. Let's look at the weekly interval first. From Q Finder, weekly graph, balance between bulls and bears. Nowhere for bulls to hide. Everything is bearish. 95% of all signals, 68% of strength signals, 96% of trend continuation, and for reversal signals even 98%. So everywhere it is bearish. Do we see some bullish headwind in the weekly interval? No. So I am not able to use the bullish headwind signal to anticipate a reversal next week. So price may fall a bit more and then recover, probably from the trend line supports, but we have to wait to see if it is holding the trend line supports before buying. So the weekly finder graphs are bullish. Sorry, no bullish at, not bullish at. Where is bullishness? Is full magenta. It's bearish. And Friday's chart, all signals 81% bearish, strength 96% bearish, reversal 77% bullish. With bearish strength and bullish reversal, we could conclude that together they are bullish, provided the absolute number of bullish reversals are comparable or more than the bearish strength signals, which is not true. The absolute number of reversals on bullish side is much less than the bearish strength, so these two taken together is not bullish, it's remaining bearish. Trend continuation also bearish. So Friday's picture overall is also bearish. Now notice here also one thing, it is getting oversold. From the price level chart we see that until next week, until I think until Friday, the bearish signals were coming from more the middle price level, yellow level. But on Friday we see the bearish signals are coming from price extreme low. 50% of those bearish signals coming from price extreme low, that is getting oversold. Again, we'll have to wait for bullish reversal signals, which will be this kind of signals. Some of them are trade setups like headwind for reversing market, box for sideways market, bounce for trendline bounce. We need to wait for one of those setups before taking new long trades. So everything is bearish now. I did tweet one stock that is actually giving a bullish signal as of Friday's close. And why I shared the tweet is not to encourage buying in this market, but to demonstrate how even in such weak market, we can look at the best stocks in best industries, and easily in a minute or less we can find a buying opportunity even in a market like Friday's market. And this was the tweet. I didn't disclose the ticker, but now is the time to do that, and I will explain very important part, not just the ticker but how did I find it so easily. But let's look at the chart first. What do I see? There is a trend line support coming from far away. Price came down to that support and had two bullish indecision in a row. Price closed with bullish backdrop, color, bullish shape. The trend line resistance is far away. Price went up this week. In daily, price came to the trend line support, had a bullish flow, bullish shape candle that broke out of the trend line resistance with bullish pressure. And though many of the market ETFs, mega caps were showing bearish reversal, this Friday we have a bullish reversal in this stock. Price went up with very high volume. Even in a market like Friday's market, you could find this stock easily, and because the stop will be just below trend line support, it is not a wide stop, you could actually take a long trade in the stock. But before doing that, we'd like to see if it was in a strong, at least relatively strong industry. The stock itself of course went up, but we would like to see the industry is relatively strong relative to other industries, and fundamentally there is some reason to buy the stock. Let me first explain how I found the stock. Notice this pattern at trend line support, breaking out of trend line resistance. Trend line support in weekly, breaking out of trend line resistance in daily. That is a very reliable pattern when the stop loss is narrow. Very profitable pattern. How do I find such trades? Very easy to do that using QFinder. So let's go to QFinder. QFinder. So what I'm going to do first looking for stocks at trend line support. Go to bullish weekly signals. Look at the stocks at trend line support. We have 4 stocks only. Now with the click of this single button here, that is called Lookup Finder Signals. It is context sensitive. When I'm in the weekly signal tab, like I'm now, bullish weekly signal tab, if I click Lookup Finder, it will look up the finder signals in the daily interval. Click that. These 4 stocks are now shown in the bullish daily signal. It looked up those 4 stocks in the bullish daily signal. What am I looking for? Breakout in daily. So there are only 2 stocks. One is MFA, one is EQC. Both went up, both broke out. One is also bouncing from trendline support. After touching trendline support, that has a bullish reversal and bullish pressure. It is at price extreme middle. And the other stock is MFA, that's breaking out with bullish flow, with a bullish reversal with bullish pressure. So I am now having 2 stocks that are having weekly trendline support, daily resistance breakout. Let's carry out a fundamental analysis of these 2 stocks. A single click and the 2 stocks come to QVital. Vital is now retrieving data from Refinitiv. While I was speaking, it completed retrieving and calculating the scorecard. Look at the stocks. EQC and MFA. Let's say if we have some reason to buy in terms of fundamentals. EQC valuation not good, earnings growth not enough data, dividend not there. MFA valuation not good, earnings growth not good, however a very large dividend yield of 60%. So this is one reason to buy. Fundamentally, therefore, I am now focused on MFA. So I started with stocks at weekly trendline support, had 4 stocks. Further, I looked for stocks breaking daily trendline resistance. We ended with 2 stocks there, calculated their fundamental scorecard. Only MFA gives me some reason to buy, so I'm ending with 1 stock, MFA. But before buying, I'd like to look up its industry's relative strength. A single click, it will look up the industry strength from QH, and indeed the industry is among the top 20% in terms of strength, mortgage rates. In terms of acceleration, it is in fact the most accelerating industry. And though Friday was a very weak day, notice that not only relatively the industry is strong, actually the industry went up this week. And sorry, not this week, on Friday. We had the bullish signal on Friday. 1 day percentage change is positive. So this industry closed higher on Friday, and of course relatively it is very strong. Now let's look at the stock. Let's look at the stocks single chart fundamental scorecard. The same information, but I wanted to show you one thing. We already saw valuation not great. We already saw earnings growth not great. We already saw dividend yield is very high. That's a good enough reason to buy. And what I wanted to show you is that even in a weak market day on Friday, 53% of peer stocks went up. That means this industry is bucking the trend in a way. And the stock, of course, went up 3.48 percentage. And let's look at the stock now. I want to show you something more interesting. This is the stock, and I'm going to open it with a monthly, daily, and weekly chart template. Monthly, weekly. I already showed in the tweet that I shared that in weekly it had trendline support, multiple bullish indecision at the bottom, bullish backdrop, bullish shape. In the daily, trendline support, bullish flow, bullish pressure, bullish reversal, very high volume, bullish breakout, bullish shape, relative performance, strongly outperforming the market. And notice in the monthly chart, we have a very long term trend line support in monthly, and price is holding that support. So that's an even more reason to take a long trade. And I would have done that if I saw this stock at the close on Friday. I was asleep, but it gave a very low risk buy setup on Friday. Again, am I encouraging buying in this market? No, but this stock is an exception. Very high dividend yield, low risk. You could either buy and hold it, or as I prefer, I would have bought it and put a stop just below this trend line support in daily. That is how in every market condition you can align trades with the market condition, or you may look for stocks that are bucking the trend and has a low risk buy setup, fundamentally strong, and industry is relatively strong. In this case, industry was actually up on Friday. But the answer to when will I start buying earnestly again is from the Q Global Market Breadth chart. I will wait for at least a large accumulation count, and often that may be often that is accompanied by Eureka, but not always. So I'll wait for that to come before buying many stocks again. This stock is an exception. Market is bearish, market is oversold in some ways, approaching support, so I'm getting ready to buy. And I did find one stock, this stock MFA, that is at a buy point on Friday. Let's not look at more stocks now. We'll wait for the Eureka and or accumulation count to appear before buying again. And I will share my analysis as usual on the Twitter. Thanks a lot for attending. I look forward to seeing you in my next session next weekend. Have a great weekend, and as these live analysis show, there is no reason not to do that. Trade profitably. Thank you.